I'd like to invite my colleague, Rumbi, back to the stage.
Thank you. And before I call upon my next panelist, I do have some good. If anyone is looking for a charger, they are adapters underneath your table so you can plug in and charge your computers and phones. I'm starting off with some good news because I might be just about to depress you. So I'm about to call onto the stage. Please join me, Scott Onder, Chief Investment Officer of Mercy Corps Ventures. Thank you, Scott. As well as Divaldo Rezende, CEO of Biodiversity and Ecosystems Future. Thank you. Thanks, and you can take a seat. Thank you both for joining me here for this discussion. We are about to discuss the elusive $100 billion. So in 2009, a high-income country set out a goal to start sending 100 billion in climate financing to low-income countries by 2020. 2 years down the line, we haven't quite reached that goal. We are at 83.3 billion, I believe. This is from the latest OECD statistics that came out, and it was showing that in 2020 we were at 83.3 billion. Low-income countries are pushing for this 100 billion to finally be realized, and I'm wondering if this will ever happen. So I'm just going to start with you, Divaldo. What needs to happen for us to start meeting some of these climate goals? Big question.
Thank you for the invitation to be here today. I'm very happy. I think always finance is a big issue for all COPs, everyone expecting a lot of money. But the way that I see finance, climate finance, is under two perspectives. One is for the government, for all the activities, normally is a lot of money, a lot of resources. And the second way to look at that is through the eye of the local communities. But both are very important. But there is one important issue when we talk about climate finance that normally no one wants to talk about, that is corruption. A last report about Amnesty International is stating that 20% of climate finance is lost in corruption. Let's say that 87 billion, 20% of 87 billion is a lot of money. We need to create tools or strategy to make everything transparent and more participation of the beneficiaries to make that resources go to the right place. It's good to start.
It's good to start. My head is still trying to figure out how much that 20% would actually be. Journalists are not very good at the math part of this. But one thing, we usually talk about corruption, and in addition to that, an Oxfam report showed that even though we're saying that countries are getting 83 billion, they're not actually getting 83 billion. The numbers are fudged a little bit, and it's more of I think their estimates is countries are actually receiving between 21 and 24.5 billion instead of the 83 billion that's reported. And so my question is, looking at the numbers, and clearly there's a shortage, clearly there's corruption. What should countries be doing to ensure that there's actually this financing and it's going to the right people? And this one is for you, Scott.
Yeah, that's a really important question. And I think from the vantage point of the private capital markets, I mean, if we're going to use this incredibly important $100 billion, or whether it's 83 or 26 billion in the most impactful way, we need to use it to catalyze private investment to these important solutions for climate adaptation, climate mitigation, and so forth. So when I think about ways to both incentivize governments and the multilateral development banks, as well as development financial institutions and multilateral funds, I think we need to make the business case that it's not just the right thing to do to invest in climate adaptation, for instance, but it's actually a massive market opportunity as well. And governments, by putting forward more capital, and they should, by the way, wealthy countries need to step up and meet their $100 billion commitments. And in fact, that is not even going to be sufficient, because I think what we're seeing in a lot of the reports that are coming out is that the financing gap around climate adaptation is actually going to grow much larger over the coming decade. And by 2030, it's projected to reach up to $330 billion in terms of that gap in capital that's needed. And so how can we make the case that not only are there viable solutions out there, but that they can be investable from a private sector standpoint? That there is a possibility to harness the capital markets and attract private capital to companies that are developing scalable climate adaptation solutions. So that's really the point of view that I start from. I really straddle kind of the humanitarian aid and development sector along with private capital, specifically venture capital, and seeing so many technology companies that are developing solutions that are going to help people living in fragile frontier markets adapt to climate change.
That's super interesting, because a lot of people that I'm speaking to are saying that there is no way that we can raise this amount of money without the private sector coming on board. But I think the statistics also show that a lot of the financing is going towards mitigation instead of adaptation. And in addition to that, we're not really raising enough private capital. So what is that business case for adaptation?
Great. Well, if that question's for me, where we're seeing just so much possibility is around a really broad spectrum of adaptation solutions. So our investment thesis focuses on climate adaptation and resilience in frontier markets. We look at adaptive agriculture solutions that are helping strengthen the livelihoods of smallholder farmers, as well as the food systems that they operate within. We invest in inclusive fintech, like insurance, that helps transfer risk related to climate. We invest in climate smart systems, such as tropical weather forecasting solutions, sustainable supply chain models, platforms that develop flood data analytics for governments and insurers. We're very excited about the voluntary carbon credit markets and the infrastructure that is being built to scale them up right now. There are many compelling opportunities at that nexus of technology and climate adaptation. But we need to seed them earlier on and use funding from governments, but also from philanthropies. It could be from donor-advised funds, it could be from private foundations or corporate foundations. We need to use it in a catalytic way. And so that's really what I would love to talk more about today, which is how can we catalyze more private sector capital by thoughtfully designing the way that we're investing the $100 billion that we want to see wealthy countries step up and fulfill their commitments around.
And I will get back to you for more on that. But Divaldo, I just want to bring you into this conversation. I saw you nodding when we're talking about carbon markets, and you spoke earlier about corruption and making sure that the money actually goes to the people who need it more. How can we make sure that if this deal is reached and people are now able to start trading carbon, an agreement was made last year, and we're now looking at sort of like the operationalizing it. How do we ensure that the money is actually going to go to communities that need this?
This is a very important question. I have been on the carbon market for, I started the first carbon sequestration project in Brazil in 1998. Long time ago, and the carbon market is a good leverage to generate resources for local communities. But there is a lack of opportunity and knowledge for the local communities. There are several standards in the market at the moment. VCS, social carbon, gold standard that could deliver that potential in terms of carbon generation and also sustainability. And the carbon market, as my colleague said, there is great potential in terms to generate a lot of resources. Only on the voluntary market, last year was around $1.5 billion. And the compliance market, the expectation is $206 billion. And it's a quite great figures in terms of results and possibilities. But what we need to ensure is that the local communities really are part of the process. They need to be involved in all the phases of the process. The design of the project, the PDD, the implementation, this is the most important thing. And we saw the same problem during Kyoto Protocol and the voluntary market on that time. And maybe we were not able to find good solutions on that moment, but now we need to look ahead and try to create something that could benefit the local communities in a proper sense.
Like you said, there were a lot of things that went wrong with the Kyoto Protocol, and right now we're sort of at the point where people are working out the nitty-gritty details. What would you want included in those details to ensure that local communities are protected?
I think more participation. For example, in terms of the UNFCCC discussions, we see at this moment more indigenous participation than was before Kyoto Protocol. And they are creating a more strategy in terms of leadership, direct negotiation, establishing the main points of the discussion, the outcomes, and this is very positive. And also we are seeing that in other areas too. And this is very important because this movement of change should come from the bottom, you know, should come from the local communities, should come from the environmentalists in terms of sustainable development, because they don't see a carbon project in the local community as a carbon project. It's a sustainable development project that delivers carbon and other products. And I think this is very important. We need to start to look at the carbon sequestration projects or the carbon as a sustainable development project in a local basis.
Thank you so much. And carbon markets is just one form of financing. What other sort of like innovating financing mechanisms should people be looking at right now, Scott?
Well, if I could bring this back also to the local level, I think that a lot of the capital that we would like to see governments commit can be used catalytically in frontier markets, investing in frontier technologies, in fund managers from those markets. More of it needs to go to gender-focused solutions and gender-led funds. So we want to see more women-led funds, more women-led companies. Our venture capital fund, over half of our portfolio companies are led by women, founded by women. We see that climate change is disproportionately affecting women, and so we work with companies to tailor their products and distribution approaches to women. And then in terms of the catalytic capital structures and how you design them innovatively to support those frontier market entrepreneurs and those frontier market solutions and technologies, you need to take more risk. And this is where catalytic capital comes in. It's supposed to accept that disproportionately higher level of risk and also be okay with concessional returns. And what that can do is it can bring more private capital into companies, into projects that are going to have massive impact. And so that's where thoughtfully designing guarantees, loan loss structures for debt funds, waterfall structures where you blend a different range of return expectations from philanthropies, from development banks, from the private sector, all into one fund structure that's going to support these early stage innovations. There's three areas around catalytic capital where I think it can be most impactful, and that's really seeding the earliest stages of innovation for the long term. So if we can develop thousands of scalable technology companies that are introducing climate adaptation solutions over the course of a decade, we will see strong outcomes and returns from those. Those companies, will be starting with adaptation solutions and building a future that's resilient. And it's going to involve taking a lot of upfront risk, and that's exactly what this funding that we're talking about today is meant to do. It can also be used to scale up proven solutions. So proven solutions that might be working in more established economies. How do we take those to more fragile frontier markets? So could we help a solution like a weather index insurance product that serves smallholder farmers? Could we help that expand into some of the least developed countries, for instance? Could we use a company's flood data analytics platform to work with the most flood-prone, vulnerable communities in emerging markets? Could we take tropical weather forecasting models and find a way to provide them directly to the poorest farmers via their cell phones in some of the most remote places? The answer to all those is absolutely yes, but we need catalytic capital that can take on more risk and not necessarily receive the same kind of market rate of return that would be expected from that. And then lastly, I think there's an area that that this $100 billion in capital can also help sustain solutions that need a layer of subsidization. So an example of that is with insurance. I think we are seeing that most countries around the world, 85% of countries around the world that have crop yield insurance policies, those are subsidized, right? And yet in Africa, I think only 4 countries in Africa are subsidizing their crop insurance policies. This is an area where catalytic capital can step up, provide that subsidization to yield insurance to help farmers have a backstop if there's drought or severe rains that ruins their crops. Those crop insurance policies could pay out, and they could be viable because we're utilizing this $100 billion in a really intelligent, innovative way. So those are just a few examples I wanted to highlight.
Thank you so much. So one of the things we're actually expecting to come out of this COP is an announcement on the Global Shield, which is like an insurance fund, which you might be able to explain a little bit better than me. But what would you want to see coming out of COP27 at the end of the 2 weeks? What would you want to see coming out of that? I'll start with you, Scott.
Yes, so I that's a great example of where there needs to be a generation-defining level of commitment, of creativity, of collaboration from governments and the private sector. And in the case of insurance, for instance, we can engage governments, insurers, and technology companies that are providing services to better understand risks, better transfer and price that risk. The Global Shield initiative is just one such example of those types of collaborations that I think can help us address the adaptation gap and help communities that are most impacted by climate change be more resilient. Coming out of COP, if we could see more clear commitments around these types of collaborations where we're using the $100 billion or more that's needed in adaptation financing in very strategic ways that really aligns incentives between both the governments as well as the companies and the investment funds that are in those emerging markets. I think that's where I'd like to see us go.
And Divaldo, we're coming to the end of our conversation. What would you want to see coming out of COP27?
More partnership and mutual respect, because we are dealing with a global community with different point of view and diversity, and of course the resources and the financial money is very important, but the most important is to realize what we are here for. And sometimes money is not the only resource necessary for that. And saying that, I also would like to give an example of a financial mechanism that we created to support local communities in different areas around the world. It's called Green Pact Unit. And this can enable support the local farmers or local project developers to fundraise the resources that they need for the first year and second year when they're going to generate carbon credits. And this is an example that there is a lot of possibility to generate resources in different activities, bringing the smallholders and the small projects for all the process. And as I said before, we really need to be very positive in the sense, and also we cannot be so naive. We need to have some instruments to avoid corruption, because 20% of 100 billion is $20 billion. And this is a lot of money and can make a lot of difference if go to the right place. Thank you very much.
Thank you very much, and thank you for doing that maths for me. Thank you both so much for joining me for this conversation. It was really eye-opening, and I hope we can continue this conversation a little bit more, because I think there's so many innovative ways that we can actually get here, and you've got so much knowledge to share with all of us. Next up, I'm going to draw your attention to the screen once again from a video from our partner, RTI. Thereafter, I'll ask you guys to all join me outside for lunch.